Hey traders, Akil Stokes here of Trading Powered, and welcome to this week's live room weekend review. This was a pretty odd week in the market. It's been very slow. We actually had the first couple of days with no trading at all, but we caught on a little roll on Thursday and Friday, and we're actually able to extract some pretty good profit out of the markets. More importantly, it was a great lesson for the traders in the live room on patience and how this career or being successful in this field isn't about catching as many opportunities as you can. Rather, it's catching those high probability trading opportunities and taking advantage of them. And sometimes the market's gonna give you a lot of them, and we got to be able to pull the trigger when that happens. Sometimes the market's not gonna offer too many, and we have to sit back, be patient, and not get into any emotional situations where the need to trade overpowers the need to follow our trading plan. So, in this week's review, I'm going to give you a great example of a trade we took on euro dollar where we had a valid trading opportunity on Wednesday. We analyzed it, decided that this isn't the best opportunity to get involved in the market, so we waited. And well, the next day we were able to take advantage of that patience. So I hope you guys enjoy. I hope you learned something. And as always, if you like what you see, make sure you leave me a comment, share, and like this post. So with the first half of the week being pretty slow, Thursday was our first opportunity to actually get some trades on the board. And actually our main trade, or our biggest trade from Thursday, came off a prediction that we made the day before in the live room. And before I get into it and explain what we actually did, let me flash you back to Wednesday's session and tell you what we thought about the euro dollar. But the point is, if you had to pick, if you're looking at it right here, the market right here, and you had to pick two levels to enter, my guess is you would say, well, there's a better chance the market's going to come up here, right? Structure's like a magnet. Price action is drawn to it. So how I would classify this, I would say, you know what, this is a trading opportunity. It's a okay trading opportunity, but the lower risk trading opportunity is for a sell. If I'm going to be a counter trend trader, is to sell up here. I've got these 1, 2, 3, 4 structure levels. I got a nice 618 retracement there. I'm not sure if I had that 1618 inversion there. 1618 is going to be a little lower, so we don't have that. But this would be the better level. So as you can see, euro dollar came right into the level we talked about. We talked about 133.20. We talked about these structure probes right here, and well, the market shot up, broke out from this bullish wedge channel, or ascending triangle, whatever you want to call it, and hit our level. Now, this wasn't the ultimate stopping ground. We said that if the market came up here, ultimately there's a good chance that we'll go up to either 34 flat or maybe even around 34.50 to touch these major structure highs. And what we were looking for if the recent break of structure was a trend continuation opportunity. So as we went down to our lower time frame, down to our 15-minute chart, we got a better look at our wedge pattern again, or our ascending triangle, whatever you want to call it. We hit this structure level 1 time, 2 times, 3 times, 4 times, 5 times before finally breaking up. And as well, if you've been with me for a while and you're a trend continuation trader, you know as soon as I see that break above, close above, I think trend continuation. And what do I wait for? Well, I wait for the retest of structure. And that's exactly what we got today during our live trading session. Now going down to the 5, here's what we used to get involved in it. We actually measured out a 3 drives pattern. So we took our first initial drive from here, swing high to swing low. And if I copy this 2 times, boop, boop, you'll see that we put in a beautiful ABCD pattern. Perfect. And if I add one more leg to that, you'll see we put in a 3 drives pattern right down here. And early on in the live room, we identified this level, this 32.71. So we actually did a little bit more. We threw some Fibonacci extensions in there and threw some Fibonacci inversions in there. And what else did we do? Fibonacci, threw 2 Fibonacci retracements in from this zone. Basically, we developed a kill zone between 32.76 it was and 32.66 and said, if the market comes within this area, here's where we're going to look to get long. This is where we're going to buy it. Now, unfortunately, as the market was working its way down, a news event came out. The public, or the traders, overreacted. Market spiked all the way down, spiked all the way up, and basically retraced up to this 32.81 level. Now, because this wasn't a level where I felt it was necessary to use a limit order, an aggressive order. Um, I said, hey, you know what, traders? We may have just missed this trade. It came down to our kill zone. Our kill zone held. You can see it. We closed right at 32.71. It may just not be our day. May just not be our week. But fortunately, as the day went on, we ended up double bottoming down here. If we bring up our RSI, you'll see we did go oversold. We got some RSI diversions here, and well, we bought them up at market. And as you can see, the rest is history. I took my target ones up here at 33.21, right at structure. Banking in about 50 pips, up 37 right now. And target twos, well, we're shooting for those extended targets we talked about earlier. We said that, hey, there's a good chance this market may spike up to this 34 flat level. Where can I put my extended targets? Well, this is a perfect opportunity to take a chance and see if we can go for one of those home run type trades. So not a bad day. We took a few other trades as well. Euro, yen, New Zealand dollar. We took a loser on, I think it was pound dollar, a losing cipher pattern. New Zealand and euro, they're still in progress, so nothing new to report. They're hanging around break even. But we did get one really good trade in for the week so far. We banked 50 pips, which is shoot, that's I'll take that any day of the week as far as day trading goes, and we'll see what Friday holds for us. We were able to end our week on a positive note, catching another winner on Friday. A slow trading day. We actually had a lot of potential orders on, but euro dollar 5-minute or 15-minute was the only one that got filled. And what you're looking at right now is a bat pattern that rolled over for both targets 1 and target 2s, making about 40 something pips in total off of a two contract position. So it ends a good week where we've been continuing our hot streak since August. Where so far this month we have 8 wins, 3 losses, which is about 73%, and it hasn't been the most active trading month so far, but we've been really efficient in what we've been taking, and that's kind of the theme of this week's video. You guys saw the euro dollar trade from earlier. It's all about putting ourselves in high probability trades. There are going to be tons of trading opportunities out there. I tell my traders this a lot. At any given moment in the market, I can probably make a reason to get long or go short. But that doesn't necessarily mean it's a good trading opportunity. So one of the things that I preach, I know Jason does as well, is we only want to concern ourselves, we only want to put our money at risk in opportunities where we have the best chance of winning. And if we can do that, we can help to eliminate that drawdown. And the easiest way to grow your account is not to take as many losses. It's not about winning more. It's about conserving capital, conserving those losses. And if you can start putting yourself in a situation where you're catching the same winners, but maybe you're not taking some of those, I hate to call them stupid trades, but you're not taking some of those low probability trades, you're going to slowly see your account size rise off the pure fact that you're not taking as many losses. So that's something to think about this weekend, something to think about as we go into the technical trader workshop. How can I eliminate losses? How can I only take the best of the best trading opportunities? And like I said, we've had a slow month, only 11 trades so far, and we're halfway through, but we're up 3% for the month. And, I look forward to a brilliant second half. Whether the market speeds up, whether it continues this slow, we're just going to continue to trade the same way and take what our plan says we're supposed to take. And I know as long as I do that, then at the end of the day, I'll end up on the profitable side of things. So I appreciate you guys joining me as always for this live room weekend review. I know it's been a while, but hopefully everything production-wise is up and running, back to normal. And I'll see you guys next week. And until then, plan your trade your plan, and you guys have a great weekend.